Understand why net lease investors love AutoZone, you need to know one fact. AutoZone has executed over $30 billion in stock buybacks since 1998. That's not a company flailing around. That's one of the best run retailers in America, and you can own their real estate with an investment grade NNN lease. Let me walk through exactly what an AutoZone NNN investment looks like. AutoZone NNN properties trade at 5.25% to 6% cap rates. Tight, because institutions love this tenant. Buildings are typically 6,500 to 8,000 square feet on 0.75 to 1.25 acres. So the land basis is manageable. Entry prices run 1.8 million to 3.5 million, which puts this in range for many 1031 exchange buyers coming out of residential or small commercial. Initial lease terms are 15 to 20 years with 4 5-year options stacked behind them. S&P credit is BBB, the same investment grade tier as Dollar General and CVS Health. AutoZone generates $17 billion in annual revenue and has never had a year of negative same-store sales growth in the last decade. That consistency is why cap rates are tight. AutoZone is one of the best counter-cyclical investments in all of retail real estate. Here's why. When the economy softens and consumers stop buying new cars, they keep driving older cars longer, and older cars need more parts. AutoZone's business gets stronger during recessions, not weaker. The company serves both the DIY consumer and the professional mechanic market, which creates two revenue legs. AutoZone's management has been executing flawlessly. $30 billion out in buybacks means the company believes so strongly in its own cash flow that it's been returning capital to shareholders at a massive scale. For a NNN investor, that financial discipline translates into lease security. And unlike some specialty tenants, AutoZone's hard corner, high visibility locations have real releasing utility if something ever changed. Most newer AutoZone leases are absolute NNN, meaning AutoZone pays all property taxes, insurance, maintenance, roof, and structure. Zero landlord responsibilities. On older leases, particularly deals from the early 2000s, you'll occasionally see flat rent for the primary term with bumps only in options. That's a real difference in long-term value. Newer leases increasingly carry 5% to 10% rent increases every 5 years. Corporate guarantee comes from AutoZone Inc., the publicly traded parent. Always look at the lease vintage and read the rent escalation language carefully. Here are the honest considerations for AutoZone. First, cap rates are genuinely tight because institutions and 1031 buyers compete hard for quality AutoZone deals. Expect to move fast when a good one hits the market. Second, verify the building prototype size matches current standards. AutoZone has multiple store sizes and configurations. Some older prototype sizes are harder to release if needed. Third, the long-term EV transition question is real for the entire auto parts category. I'm not telling you to avoid auto parts NNN. The vehicle fleet is still 97% internal combustion, and average vehicle age is at an all-time high of 12 plus years. But understand, this is a long-term question you'll need to form a view on if you're buying a 20-year lease. AutoZone is the best positioned company in the category to navigate that transition. AutoZone NNN is a category I'd happily own myself. It's one of the cleanest stories in retail net lease. I'm Ryan Solberg with MaxLife Commercial. If you want to find AutoZone NNN properties in Florida or compare them against O'Reilly deals in the same market, let's talk. Visit maxlifedevelopment.com or call 321-586-2121.